Okay. Again, the session is being recorded, so I'm going to kick off again, repeat the same thing. Good evening, ladies and gentlemen. This is Clueless Trading Frank. This is a free market update webinar on June 19, 2017, approximately 7:28 p.m. Eastern Standard Time. This session will be recorded and uploaded to the YouTube channel, which everyone should be subscribed to by now. All you got to do is put your email in there so that anytime I'm publishing and uploading any of these critical video casts or ACS sessions for paid students, then you shall be notified directly through the Google through Google email system. Full disclosure: this is purely for financial education and not for any solicitation or advice, as you all know. And welcome. So let me take a quick roll call. Make sure we have all the members able to see the screens in the back and hear the audio. We have House. Yes.
Yep, I'm here.
Okay, excellent. We have Mike. Michael. Yes. Okay. We have MW.
Yes.
Excellent. We have KBot, aka Sweet. Yes. Okay. Okay, Mike. Thanks. We have Thelos.
Yep, here.
Okay, good. And we have Victor. Vic, correct? Vic, can you hear us? Okay, so we're just going to kick off. People are going to come in, and everyone's got their work schedule and stuff. So, all right. So, first of all, I want to just dive in directly to what's going on and just keep things in simple terms, as I always like to do. So bottom line is, by now, even with a lot of you terrific new members who have joined us recently in the past couple of weeks, you are starting to appreciate, which probably many of you didn't before, prior to joining Clueless Trading, the power and the ferocity of these algorithmic high-frequency trading programs that dominate the market. Behind you, you're looking at a chart that has been posted throughout since I would say, well, it keeps on going back and back. It keeps on going a long time back when we were in this. Well, it seems like a long time back. When we were within this very tight trading range, high volatility trading range. We're still in very high volatility, but we're starting to see a very defined pattern that's coming out, which I had predicted and forecasted weeks ago, that something like this would happen. And this goes back to, wow, tax day. No, this goes back to 6/6/17, to the beginning of June. So you're looking at beginning of June here. So make this visual, because after all, these visuals are extremely powerful and make us a lot of money for tactical traders primarily. So here we are at June 5th, and okay, so we start off here. This is the beginning of June right there. So just keep an eye on this, and we're going to travel through time, and it seems like an eternity, as I'd like to say, in the day, in these times that we live in, which I have explained many times. Time is compressed. We are looking at we are not looking at linear human time. We are looking at algorithmic high frequency time, which is measured in seconds. They trade in nanoseconds, and we see these charts in matter of minutes and seconds. So days are compressed within minutes, and in many cases weeks are compressed within hours, to be honest with you. I've seen this before, but the preponderance of these machine-driven trading, which in due time all of you will come to appreciate and embrace this type of volatility, as I've always tried to showcase and explain to all my members, you'll start to appreciate it too. And once you embrace it, it doesn't become as much of an anomaly or and it's not as weird, for a better choice of words, as it might as it is to the rest of the world. I would say a good 90% plus of traders out there who are trading off just simple prices, trading off their emotions, and whatever it may be, they are completely, in the truest sense, clueless. Not in our sense clueless, intelligently clueless, but truly ignorant about the fact about what these markets are. And I doesn't matter how many times I say it. I mean, I'll keep on repeating this till it becomes a norm. And this new paradigm of fast-moving, extremely fast-moving markets are not looked on as a surprise to any of my valued Clueless Trading members. And I know it's getting through to a lot of you. So here we start off at the beginning of June, and I've been walking people through this every single day. And here we are. And we are going to discuss and dissect these two major patterns which culminated into a monster breakout, which again, right here in that 2450 level. Now keep in mind, these are the S&P 500 futures, so you will have to simply add 4 or 5 points to the numbers. Keep that in mind. For some of you who don't know, the E-mini futures, basically you have to add 4 plus 4 or plus 5 to the actual E-minis, ES numbers in order to arrive at the actual S&P number. So 2448.50 would be 2453 or so on the S&P 500, and you can see that on your screen. We closed at 2453. So that's where we are. So bottom line is that one of the key things about this type of markets are that as humans, we all kind of get completely whacked out of shape, for a better choice of words, and I try to keep people within track. I try hard. It works on some and it doesn't work on many. What can I do? I'm just doing my job in providing the content. But when things, when the volatility moves start happening and constantly keep on happening, people just they lose their mind. And what I find, as you all know, many of you know, that during these heavy zigzag, which are nothing but structured volatility type of movements down and even up, but mostly on the downside, human retail traders are silenced. And I mentioned that a few times in the post. It is not meant to be directed at anyone. It is meant to be directed to all of us. They silence the human traders. They don't know what the heck to do. Yet I'm putting out there that you got to buy these tactical lows. There is going to be a massive rally within the next 24 to 48 hours. We are seeing, and this is just one chart that I'm showing. I'm showing a lot of them, really powerful ones, signaling that the time has come to start cost averaging on a particular asset, whether it be the S&P 500, whether it be Google, whether it be Amazon, whether it be Netflix, whether it be Alibaba, whether it be the Russell 2000, the IWM, the SPY, whether it be on the biotech side, pick some names that we trade, whether it be Regeneron, whether it be Allergan, whether it be Clovis, which was just a monster. I feel really sorry for the ones who just let it all of Clovis go. I always said that's a swing trade you got to keep, and it's still going to go higher. It's probably going to pull back a little bit. It's quite overbought right now, but if this thing is real with what they're doing with their cancer therapy, it's basically $150 stock. Anyway, so what happens is during those times, it's deafening silence, which is fine, but I also inaction. And that inaction obviously proves to be very deadly for many traders because the saddest fact of life is that the pain of regret, sounds like a cliche, but it's so true in trading, especially that the pain of regret is far, far more painful. And I've been there and I know, than the pain of sacrifice. And so what is sacrifice? Sacrifice is basically cost averaging. You buy something at, you buy something at, 1 second. So you buy something here, let's say at 4, and that baby's down here at 2, and you got a dollar cost average. I say that all the time. You cannot trade these markets without dollar cost averaging, period. There are very few instances where you're going to buy something and it's going to be a straight line up. Yeah, today was, and it's happened a few times. It was here too. But then by the time you guys get in, well, not all of you, some of you get in because you're feeling comfortable, this happens. And you don't think that's going to happen? It's going to happen again. And it's going to wipe out all the, atypical lemming chaser traders who are getting in, looking at prices only and chasing something because it's looking good and, feeling good. And that feel good is going to turn into a very nasty sadness as the algorithmic high frequency trading programs hit the market at exact specific levels. And we're going to look at those levels. I've already mentioned them, but I'm going to explain them as you hear from my own voice. And that's just the way it is. There's no way two ways. This is a serious bull market with very serious short-term retracements or resets or corrections, which you all by now know happen very, very suddenly on any type of catalyst, which most cases is not even a negative catalyst. So if you're not concentrating on cost averaging at these type of levels, or even around these type of levels, and I've posted many charts talking about these clusters, right? Volatility clusters. So that brings me to one very important point that I'm going to keep hammering on, just for your benefit, not mine, because I'm the one creating these charts, which are making a lot of money. I mean, a lot of money. So the point is, and I don't think there's many people. I mean, I'm sure there are people out there who have this type of predictive modeling, because this is predictive modeling. This is not reactive modeling. I'm not reacting to things. I'm predicting what's going to happen, and I'm laying down my roadmap on what those levels are, where you need to basically place yourself. There's no one exact number you can place yourself and it's just going to be a straight line up. There is a cluster of numbers, which means you got to buy a little bit lower, you got to buy higher, and that's just the way it is. So that brings me to my point of, I think I lost my chain of thought there for a minute, is that you have to look at all the charts and try to understand, and I try to make it as simple as possible. My fingers are literally falling off my hands by typing in the long-winded, quick, short explanations of the different patterns that I've played in place. Look, what I'm doing for you guys is, and again, I'm not saying this to make myself feel good. I'm just doing my job, but I just want you guys to understand it as fully as possible. Okay, just want to be clear about that. So the bottom line is that I'm putting down the actual pattern analysis, what I'm seeing, with the alerts in many, many, many cases. And the charts itself are, like they say, a picture is 1,000 words. Well, these pictures are worth thousands of dollars. So when sometimes I get a little bit frustrated in the chat room, for example, I'm just human. I have a right to be frustrated sometimes, is when people come around and not look what I'm putting through and ask some redundant questions in the middle of my background work where I'm setting up more charts for all of you guys to make money on, even intraday. So it's taking away from my time, which is being spent to help you guys. Think about that for a minute, okay? So I'm going to, like I said, and this is our chat room is like a trading floor, right? Everyone's kind of heat of the battle, doing their thing, lots of wowzers. People are making crap loads of money. Some people are, based on my work, based on my alerts, to position themselves, which they did last week, last Friday. Um, S&P calls were up almost 600%. In fact, they were up. Yeah, they were, because the 2430s were bought between $3 and $4. They went to 2340. In fact, they ended at 2340. Think about that for a minute. It's like giving you a stock at 4 and saying, you know what? In one day, that stock's going to be up to 24. Well, forget 24. That stock's going to be up to 15. I mean, he can't get any better than that, guys. So you got to take full advantage of this stuff. So you got to be, and it's not that hard because I'm laying down in very simple terms, in very simple language, and in some technical terms, which I have to. And that's depends on you guys how far you want to move along the ladder in understanding those technical terms, which are just going to make you more money. That's the way I look at it. And those include people who are taking the coaching sessions and all that stuff. But just during the day, you gotta just you gotta look at the pre-market chart. You gotta see what's And I cannot post, just so you know. It is not physically possible for me to provide this type of precision content and provide 100 different charts during the day. I've heard minor complaints from some people. Oh, he puts too many alerts out there. Oh, great. I traded many other stocks today on my side, which were stocks that we trade and charts that were put in place last week, the week before. But I can't just post all of them. They're there. You have to take it and run with it. You have to look at it, use my work as a tool, and move on. Do not expect every single of our trading. We have a batch of stocks that we trade, right? And it's roughly about 20 or so on the biotech side, on the financial side, on the technology side. And then we have small caps. And then we have the runners, which just pick up and run. And then we have some restaurant stocks that we trade. So bottom line is, and then we have other type of tech stocks like the Twilios of the world that we trade, the ACIAs, the Clouderas. I'm not trading all of them at the same time, but there's a lot of them that you guys have to basically snapshot that chart, replicate that on your screens, need to really know how to set up the charts on your screens. Then, like I said, you want my time and my energy to help you do that, I'll certainly do that. But you got to do the coaching sessions because I'm not going to, I just physically not possible for me to spend hours and hours just doing all that stuff. So saying all that, you understand where I'm coming from. And I just wanted to make that very, very clear. Because, once in a while we get, can you bear with me one quick second? Just hold on, guys. I'm going to stop this little alarm beep going on. Okay, so can you guys hear me? Hello?
Yes.
Okay, go. I just didn't want to get cut off. All right. We had a massive, massive, vicious, and it's still kind of going on and off, thunderstorm here in the New York area. And that's causing a little bit of issues with alarm systems and stuff like that. So I just need to quickly check. All right. So saying all that, I know you guys understand the gist of what I'm saying, and let's move on. And like I said, one extremely important thing here. Trading, when it comes to trading, have a thick skin. All right? I know I have a thick skin because I'm a New Yorker. I don't care. Nothing phases us. and especially me. But have a thick skin. This is not a personal business. Stop taking things like it's and some people do. And I say to them, you want to be a great trader, you got to have a thick skin. Have a crocodile skin. Don't take anything personally. The chat room's like a trading floor. Sometimes it gets heated. Most of the times it's fantastic. And you know what? It's all good. No one is there. Everyone's there to help each other. I'm obviously there to help everyone. But if somebody is getting, a little bit annoying because they're not doing their work and it's taking a lot of energy out of me, then I am going to certainly snap back. And it's all good because it's all part of the coaching, part of the boot camp. Saying all that, let's take a good look at what's going on here. So we have had two massive, and I mentioned this way back on at the beginning of June, that once this volatility move, and these are these flash crashes, right? The flash crash on Thursday, the tech crash, and we have two of them. And once they start to abate, you start to see a lot of these long tail reversal hammers. And even after this long tail reversal hammer, which we did extremely well on, the following day, this was 2 Thursdays ago, on a Friday again, there were multiple basing patterns. These basing patterns, if you enlarge them, are nothing but basic are repeated zigzag type of inverted head and shoulders, which basically looks like this in a perfect world. In an imperfect world, they look like this. But you can always, I always show where the head is, which is basically the first of the, and you can see that on all your stocks too, where you see a long tail reversal. Let me change the color of this. A long tail reversal, and then you start to see a bottom formation. Now these bottom formations is exactly where retail human traders get completely silenced, and I can understand why, because there is no telling whether or not it's going to completely break down. But I completely refute that statement that there is no tactical, that we can't identify tactical bottoms, because I constantly keep on doing it. Whether at this very critical juncture, which was back on the first part of June, and whether here, which was last Friday, I detected, pinpointed every one of those tactical bottoms. And tactical bottoms are not created with a simple V-shaped move. Not in this day and age. A V-shaped move can only be looked on if you're looking back on a daily chart. That's when that's what smooths out all the volatility, all the algo HFT volatility, and you never see those. All you see is something like this. That's on a daily chart. Now, if you think you're going to make these type of humongous returns that we are delivering, from 200% to 600%, some cases 1,200%, some cases 2,000%, which was Amazon on the buy of Whole Foods on Friday. Those lottos on Amazon from the day prior, Thursday, were up 1,600 to 2,000%. I've screenshotted every single one of my trade alerts that I put out there and what the ROI percentages are. And I'm putting them together this week so everyone could just stare at them and wish they were there. And I know some of you were there, but most of you weren't. And that's nothing I can do, because I've tried to help as much as possible. So so bottom line is that with these tactical bottoms are formed, and I'm just going to keep this real simple, you are going to see massive volatility. And you're going to see slightly less, but similar type of volatility as we start climbing. So this was a cup. See that? I drew it out for you guys. And a minor handle, also known as a consolidation handle. And wham, bang, that broke out, hit this channel. That's the channel. So if the world was perfect, it would have done this. Forget the channel. It would have simply just stayed within the channel and kept on climbing higher. Kept on climbing higher, right? Except it doesn't work like that. And anybody who's thinking that it works like that is living in La La Land. And like I said, this ain't grandpa's market, okay? Because we did get So this channel basically went up here, right? That would be the perfect thing. Guess what? It still did that. It still did that and got to that level. Okay, got to that level right here today. So the bottom line is, let me get this line out. So the bottom line is that if it was a perfect world, and life is not perfect, we all know that. We seem to accept that about life. We don't want to accept that about trading for some weird reason. What do you call? So we have, so it takes a detour, right? Instead of staying within this channel and climbing higher, it takes the nice detour. And that detour is a consolidation channel, which lasts maybe a day, which it did, middle of June. Now keep in mind another thing that many of my older members know, and some of the newer ones know too from the video cast, that the mid-month period of the 15th, give or take a couple of days, plus minus 2-3 days, is the most vicious reset or pullback period in the market. And that's exactly what happened. The 15th, the 16th, the 12th, till the 13th. Okay? And I knew this was going to happen. I showed that on my charts. I went long those SPX call based on my charts and this mid-month pattern, which passes after the today being the 19th. It was already past that error the danger period, plus minus 3 days. So just keep that in mind, and you see it happen every single month. Just so you know that. The first part of the month, lots of new money inflows, pension funds, mutual funds, state funds, like putting in money, so you get an automatic bump. The first 5 trading days, not calendar days, first 5 trading days of the month. Then mid-month comes, it's the reset. And then it continues. Now this is a recurring pattern in a uptrending bull market. In a bear market, it's a different story. So I've always said we are in a full-scale bull market, which in between sharp corrections will continue to climb higher, and some correction will be sharper than others. We've seen that. Brexit last June. We saw the big pullback in January and February, and then it turned around in February, and then we saw the pullback 9 days prior to the elections last November. So we've seen quite a few of them. The pullback before the French elections, you name it. So bottom line is that you got the consolidation, which is nothing but profit taking, and it created a beautiful handle. Here's your cup. Here's your handle. Once it broke out of the handle, it tried to enter this particular channel, and it failed to do so. It created, and then let me zoom in for everyone to see. It created a bearish engulfing. You can see that. See this? See this? Whenever you see a bearish engulfing bar, you know there's a fast sell-off coming. That's just the way it is. Okay? And that's just standard technical analysis. That pullback came, and all it did was basically test the upper end of this handle. You guys are going to see this recurring pattern in a lot of things. And like I said, they work. So it then you had, right when it almost kissed the top of this cup and handle, it bounced hard. Now all this I'm showing in real time, but now as we're revisiting it on off market hours, you guys can see it more clearly. And that's the reason why I'm doing this. Then you get this move up, and it hits the downtrend line. It fails the downtrend line on So there you go, clean. Okay, so it pulls up real nice. The average trader, retail trader, human trader starts getting excited right there. Pull back again. Has a nice swing down on the 14th. The dates are down here. Sharp move up. All this predicated by simple stochastics. And of course, the more complicated stuff that I show using the Algo HFT platform. And by now, all of you should know those are the ones with the black background. They look like Thinkorswim, but they're known as the Algo HFT. They're basically based on the bar chart platform provided by the Quad service that I use for my quotes and all that stuff. And just a reminder, if anyone's interested in trying them out, let me know. I'll send out the email. You take it off from there. All right. Want to subscribe to it? They have a very discounted rate for Clueless 8 members. I don't have it's a full disclaimer. I pay them a lot more than the discounted $120 that are offered to my members. And I have no financial interest in Quad whatsoever. I've been using them for almost 12 years now. From my Wall Street days, and I'll tell you, they are amazing. The way those charts are put through. Anyway, so then we hit a top, which could have gone up here, 24.45 that I was looking for, but it didn't, and it did that again. The bearish engulfing big move. We caught a good portion of that. And then the last part, we waited around to cost average down and buy the lows. Now, there are two ways to make money in the market. One, depending on your bias, you can go all out short, which doesn't work because it's just too fast. Or you can be a tactical short, like I do, where you could basically short on smaller time intervals. Unless we see a massive breakdown below, let's say, 2380 or 2360, not 2400. The trend change comes, we'll take a look at it today, I think below 2350 or something like that. That is indicating a much larger short-term cyclical pullback. And I think that's coming around, as it always does, in the months of September and October. So that's what you should earmark for those big time. And that's going to be fast too. It's not going to be a slow-moving train wreck. It's just going to be fast. And like I say, the faster, the better. So I decided at this point that I'm going to cost average and see, and I noticed the exact pattern symmetry, and I showed it to you guys also. Just a quick look. You don't even have to super analyze. These two patterns right here and here, they look the same. Just a quick visual. You don't have to get into the nitty-gritty of the long tail reversals and stuff like that. They look the same. That's known as a volatility cluster. That's what the supply, that's what the demand is. That's where the institutions or whoever the so-called smart money, I don't know who the smart money is, because a lot of the institutions and hedge funds are just the dumbest money ever when it comes to forecasting, trading these markets. But that's where looks like there's a lot of support. In other words, there's a lot of demand at that point for the buyers. So I showed that, and this is what happened. Now I showed that on Friday, and the 15th, 16th. Oh, this was Thursday. Then Friday, going into Friday, I kept on showing that there was a uptrending channel, all kinds of stuff. I don't, it's all there in the Twitter feed. Please go ahead and take a good look at it. And then right at the end of the day, I'm sorry. So this was 15th. Sorry. So it's showing that, and I said we were going to hit the uptrend line, and it's exactly what we did. And once we did that, immediate sell program, right off the downtrend line, no magic, right? And that was Friday. The 16th, right? 16th was Friday. There you go. So to me, it was a phenomenal buying opportunity because I started to realize, which I share with you all, that there was a beautiful pattern symmetry that was going on here. We could have slipped lower and tested 24.17. We were almost there. So for just 2 or 3 points, not a big deal. Stows were uptrending. This is the simplest way you guys can, when you look at my charts, look at the internal stochastics, the full stochastics or the slow stochastics. Look at the chart above. In most cases, I'm pointing these out, but I can't be putting that many notations on a single chart. You guys have to know what you're looking at. And that reminds me, for all you new members, there are some fantastic tutorial videos on the new member introductory on the playlist on the YouTube channel. Series of videos how to look at these things, how to analyze them, and use them to your benefit in tandem with my alerts, and also the real-time videos that I record of the screen in between my busy trading day, so you guys can use that as a tutorial. I did that for the Fed one, which I haven't uploaded yet, but I did that for the Comey. This whole drop was because of the Comey thing, which I mentioned that was going to be market negative. The rumors of the Trump investigation, Mueller, that the special counsel Mueller was going to was looking to investigate Trump. And if anyone knows anything about special counsels, they don't go around telling people if they're going to investigate you. All right, so that's kind of stupid to start with. Anyway, that's what the rumors came about and stuff, and the markets reacted, with this nice fat red candle. So I recorded that. I put 3 of those videos out there, and I noticed that many of you, and we live in the day of tech. I know exactly who sees the video, who doesn't, right? It's just one click on Google Analytics. Many of you haven't even watched it. So I don't know what the heck some of you guys are doing, because that was so specific on the breakout, on what was going to happen, that you couldn't have resisted but bought a decent amount at these levels. The emotional traders, what they did was like, oh, there's a lot of overnight risk, and I'm not going to hold anything overnight. They missed out. They didn't miss out completely if the bought again on the ramp up on the first part of the day, but they missed out on the big money. And this I've seen happen over and over again. So just to help you guys out, it's just a normal occurrence that I see. Missing out on really powerful tactical buys, making a little bit of money and saying, yeah, I did well, that's okay. Well, you keep on telling yourself you did well, it's okay. Your account's never really going to grow to the level you want it to grow, because you're not at Clueless A Trading to make 30% on your money. All right? You're in Clueless A Trading to basically make that 100%, the 200% on those selected trades. And you will have losses along the way. But those losses you have to manage. We all have losses. But so what? Like I told somebody, you got a loss on 2 trades, make it up on the next one. And the same day you can do it. You got to have some cash on the side in order to do it. All right. But simple stuff, believe me when I tell you. Hard. Trading is hard. But it's simple when you look at the philosophy behind it and how I'm putting things across. So anyway, so you do this. This was the Friday 4 p.m. close. We bought the calls between $3 and $4, all within this range, right? And nice ramp up at the end of the day. Loved it. This is certainly a powerful candle. Anything can happen, but that was a high probability move. It would go higher. So here was the 4 p.m. close that I put out, and then I noticed these 2 fat candles appear to hit the downtrend line right there. So I sold a little bit just to test it out if those trades were real. They took it. They took those calls, the 2430s, which were bought at between 3 and 4 at $6 right here, or 6.5. And I knew this was real. Algos don't suck up your calls after hours if they think the market's going to crash on Monday. Somebody always knows. All right? So so that's the reason I put 4 p.m. close. There was that gap fill again. It tested it. That was a gap fill from way back. So anyway, it was that was the level. And any of you who are actually monitoring my charts knows exactly what I mean. And then this happens. I mean, that's called off the charts, right? Yeah, that's what you call off the charts, because I got to now bring it in the thing. There you go. So there we are. These are big, fat impulse waves. They are not straight lines. There are a lot of zigzags. That's what I'm walking you guys through. And now we're here. Can we go higher? Sure, we can pop higher. But we're at that point here where we are getting pretty bloated on certain fronts, and there needs to be a reset. Now, whether the reset comes tomorrow or whether it comes Wednesday, it's coming. The reset's not going to be anything big. I've shown it on my previous charts with the arrows and everything. But the reset is going to be, they're going to test 2443. That's 7 points, roughly 42 Dow points. Big deal. A nice reset would be down here to retest this downtrend line. That's the dotted red line, which would be around 2440. That would be 10 points from where we closed at, 10 or 13 points. That translates into roughly 60 Dow points. Nothing big. On my multiple charts that I posted, especially at the end of the day, you're looking, we could test 2436, where we basically broke loose early this morning. Remember, these are the futures charts. The backbone of what you guys are doing on the front side, what we're all doing on the front side. And so that was 6 in the morning. And that'd be nice to come down here. That's roughly 14 points, talking 80 Dow points or so, 80, 84. That'll be a nice reset. We could get that as early as Wednesday, or we might not get it, for all I know. That's the reason, coming back to this, I said, is this a head on shoulder or dragon bullish with question marks? Because a bear will look at this and say, that's a head. Let me actually make this larger. And I'm not trying to make any of you guys specialists on SPX and E-minis or anything like that. I'm just showing you this because everything that you're doing on the front side with the trades is going to be affected by each of these candles, period. So if you don't understand these charts, you will not be able to manage your trades on the front end. And it doesn't matter how fast I'm alerting, you will not be able to react. And many of you know that. So it's good to have a good understanding of these things as I'm putting them out there. So you are kind of on the same, what's the word I'm looking for? We're on the same side of the table and you're looking at the same plates than what I'm looking at. So here, you got a couple of things going on. This could be looked on as a quadruple top, right? 1, 2, 3, 4. That's after hours right now. And a rounded top. Because keep in mind, tops are a process. It's not a one-day event. So even if we have a short-term top, which would be a tradable short, it's going to be a rounding process where it's going to hit that, come down, hit that again, come down, hit that again, come down, blow over it, come down. But overall, when you draw the curve, it's a rounded top. The dome. So are we at the dome? I don't know. All I'm saying that big red candle is a big institution that dumped a crap load of E-minis or S&P futures right there off the top around 2452 today. So one has to respect it. Does that mean there's going to be a continuation pattern right away? Nope. But it does mean that the size of this candle is giving us an early indication that we might be at a short-term top till we reset. And those resets I explained to you guys. Could be down here, which would be nice, or it could be coming back and testing 2433, which is roughly 20 points from this particular top today. What's 20 points? Roughly 120 Dow points or so. Am I clear on that with everyone? Yeah? Okay. So 120 points, that's a nice reset. You could buy that, you could trade it. Are we going to continue making new highs? I don't know yet. We'll take a look at the actual channel, weekly channel, which is still looking fantastic on the SPX, and we'll all make a determination what we see. So this is where we are. We have a pinched Bollinger, right? This is the Bollinger Band is pinched. And we are not, this is a 15-minute chart, so it's actually showing you some very short-term movements. The 1-hour chart is a little bit more explanatory. But this is 15 minutes is great for the trading charts. So yeah, so this is where we are. So I don't know whether it's a head and shoulder with the head here, multiple left shoulders, and here's your neckline. Very tight base ranges. So it can happen within like an hour, half an hour. But once we break the neckline, there's a good possibility that we come back and test this. So that's the first explanation. That's a head and shoulder bearish explanation. The bullish explanation could be, hey, this is starting to look like another frigging W with a multiple bottom at the neckline, which is probably going to be the case. So if it's going to be a dragon bullish, which is the term used for the W patterns, right? This is turning out to be another one of these dragon bullish. And if that's the case, then if we break out of here, then we are going to get another 60 to 100 points on the Dow, bringing us up to 21,628 on the Dow Jones. So I don't know yet. We'll find out. Me being more of a predictive forecaster, I will like to know this and alert all of you prior to it happening so we can do what we always do, which is catch the wave on the lower end of the scale. And hopefully this time you guys will be going in, be some of you newer guys who haven't seen my work in real life, and you're starting to see a sampling of it, will jump in. You don't have to jump in hard, but you jump in with some, decent money. So this is where the sacrifice comes in, where you have to cost average, where you have to keep on constantly looking at the charts, or at least cost average, sit back and say, okay, going higher, I'm going to hold it. That's the sacrifice part. The shooting the fish barrel part, which is the reward part, is here. You will never get here if you're not here. Simple. All right, let's move on. So at this point, if I switch this to an hourly chart, you can see what's going on. Okay. I know there's a bunch of notations. I call this the bear kill zone. This zone between 24.26 and 24.33. And boy, was it a bear kill zone. It was a big bear kill zone. Does everyone understand what a bear kill zone is? It's just, it's just a funny term for saying that's where the bears get shot. All right? It's bear hunting season. Just go out there. Take some of the big bears down. So bottom line is that's exactly what happened. Now, this was a bear kill zone too, between 24.34 and 24.40, and this is where we are. Now, just extrapolating to the upper Bollinger, we could get 24.53, which is roughly 24.60 on the SPX. That comes to another 7 points where we closed at today, 24.53. So that comes to roughly another 42 to 50 points on the Dow. Now, individual stocks will obviously ramp up higher. Those are just the round figures on the bigger indices. There we are. So this is certainly a significant breakout. This breakout level, I believe, will hold in the short term, even though if we slip below that. It's also very, very possible that we do this, which I've seen happen way too many times, where we create and test out this. This was the big breakout level today, around 10 o'clock, right there, right? And I've mentioned this in one of my previous videocasts, and please listen to it. Markets, these machines have a sweet way, and I bet you it caught a whole bunch of hedge funds who were really short the market by surprise. They didn't expect this fat green candle at around 10 o'clock, and the breakout at around 10 o'clock, right there. And you look at the time down here, right? Now keep in mind, this is investing.com. You guys can use this, just use it. It's free. Just type in investing.com and try to draw the charts like I do. And if you want some actual hand-to-hand help, then sign up for the ACS sessions. I'll show you how to set these up. And once you set these up, you're going to be a far better trader than you ever imagined, because all of you have it in you. Technical analysis, the way I show it, is not tough stuff. Technical analysis, like what some other services show, even I don't get it. I mean, that's like rocket science. And most of those rockets blow up because I don't see them being right. So which is the funny part. They spend all the time and energy with all these wave structures and hardcore stuff that really gets me dizzy. Okay? And they're wrong. Seriously, I'm not pissing on anyone. I'm telling you the truth. You see a lot of them on StockTwits, other forums, hardcore technical charts. Minute wave 2, 3, 4. But where is the predictive analytics? I don't know. I'm not there to help them. I'm here to help you guys. So that's where we are right now. So this candle is after hours. I posted that it was right after 4 o'clock. So there was a sell block. That's all. So let's move on. Now, let's take a look at the Thinkorswim version. I know many of you use that, and I've been showing this chart for a bit. So this was the impulse, or what I call a white swan breakout. Everyone knows about a black swan, an unquantifiable event that hits the markets, such as the rumors about Mueller investigating Trump, such as, more importantly, that Comey revelations, okay, back then, that when the market really got hit. So all those and all these sudden pieces of news. The next black swan, I hope it doesn't happen, is, I mentioned it a few times, I'm sure some of you remember, is if we get into a firefight on the skies of the Middle East with the Russian jets. That's not going to be good, whichever way you slice it, dice it, Putin or no Putin, okay? And that is going to create at least a 200 to 400 point pullback in the market. But I don't think they're going to go that far. But the Russians have warned the U.S. military operational commanders in the Middle East that if they are going to be shooting down Syrian warplanes, and as you know, Russia is a huge supporter, and, well, it's their sugar daddy, out there in Syria. If anyone knows anything about politics, Russians are supporting the Syrians, who in turn are shooting at our soldiers, are more of our SEALs and stuff who are operating inside the country. Good stuff, right? And then Putin's telling us how much he loves us. Good stuff. So so the bottom line is that if we do get into a firefight, it's not going to be good for the markets. That's a black swan event. And I don't wish that on, it's not going to be World War III, but it's not going to be fun. So saying all that, oil's going to spike. So that's going to be the plus side of the picture. And SPX puts will basically give you 400% on your money or more. What 400%? Today alone was 584. Shorter term ones will give you 600% on your money. But again, it's a black swan event, so we don't know when it's going to happen. So here was the white swan event when the impulse breakout on June 1st, just repeating some of the things I've explained before. And then we were trading in a wide range, which we traded spectacularly. And you can see here what is going on. So I am just going to show you the range breakout on Thinkorswim that, and again, this is only exciting to me because, not because I like charting and like, oh, the charts really excite me. No, because it makes money. Charts make money. It's really as simple as that. Aside from that, to an average person, it's nothing but a bunch of lines going up and down. Who cares, right? Fine. To us, it's critical. So each of these lines are drawn to show rising wedges, channels, There you go. There you go. And it just happens to be this channel, when I drew it right now, just fell upon, because I just hit some points which I wanted to hit this point right there. I wanted to touch this bottom and keep this a parallel channel, right? And guess what it hits? It hits the 34 moving average, this orange line. That's 24.38. We are going to come to 24.38. That's 11 points from where we are on the E-minis as we speak. So that's going to happen. Along the way, there's a 20-day moving average. Well, this is a 1-hour chart. That's a 20 SMA, basically the 20-day moving average, except on the hourly chart. That is trending higher. All these are bullish, by the way. 24.42, first level of support. Second level of support is right there, the 50 and the 34. Simple stuff. Once it breaks that, then you start having a trend change like you had here. Now, here is another interesting thing that I wanted to show all of you, and I want you guys to see, tell me that you can actually see it. When the 34 crosses over the 50, it is a negative signal. When the 34 crosses under the 50-day moving average, in other words, sloping down. When the 34 crosses over the 50, it's the start of a wave. See? Now, by the time it crosses, in both cases, you still could have made a lot of money. It didn't cross till we went till Thursday, but the actual sell-off began on Wednesday off the top, right? So in other words, this 200% on your puts, you would have totally missed if you were a traditional chartist and waited for this crossover to happen, crossed under to happen. Same thing here. You would have missed a nice 100+% on the index calls, or in individual stocks for that matter, on Friday on this reversal if you were waiting for this cross. This cross did not happen till, and this being the futures, did not happen till, let's see, this cross happened exactly as I showed on the previous charts, that it hit that downtrend line. It happened at 4 p.m. Look at the time, 4 p.m. on the 16th. Look at the date up here. See? So the algo set it up where the cross of the 34 and the 50 happened exactly between 4 and 4:15 p.m. when those calls spiked more. So the $3 to $4 range SPX calls that we bought in the 2430s, which some of you did too, were already at 6 or 100% on your money, and you could have sold at 100%, mind you. You'd have missed out on this big run. The other 600% wouldn't be there, but you could have made 100%. I sold a few, 100% right till 4:15 p.m. on Friday. Remember, futures trade till 4:15 p.m. every day. So you can sell your SPX or any of your index calls or puts till about 4:15 p.m. They're kind of tricky. The spreads are wide, but I'm just letting you know that they're open for business till 4:15 p.m. So looking at this chart here, and I compress it, trying to find out how far we can go, 2460 looks like a reasonably good bet on the upside, given the fact that this was a breakout and this is still looking like a bull flag despite this red candle. Looks likely. I could keep on compressing and bringing it all the way to 2500. I don't want to go that far. We'll probably hit 2500 at some point because we're just around the corner. 2500 is rough, is only 250, about 300 points away on the Dow from here. 2500 on the E-minis or the S&P 500. So looking at this chart here, this is still positive. We still have a little bit of room to move, but we are getting pretty severely overbought. Very strong momentum on the markets, but notice one of the stuff, just little things I'm showing you, so you're a little bit more educated, as I like to say, instead of being educated. So look what happened. This is a 4-hour chart. So it slices the day in half. Can somebody tell me what these two bars mean? Anyone? Is anyone around? Hello? Did we get disconnected?
No, we're here.
Oh, okay. So this is important.
We're here.
I'm not quizzing any of you. I'm just trying to, So this is a 4-hour chart. So it slices the day in half, right? So this was Monday. So forget this for a minute. So when you look at something like this, let's look at Friday, right? So Friday, the first half of the day, this red candle meant what?
Selling.
Right. So the first part of the day was all selling. Remember, E-minis are very clear. That's the reason why I track them. That's the reason why my trade forecasts are so accurate, partly. Okay. So the first part of the day was all selling, right? So sometimes you're going to see a green candle, and basically it's the actual players behind the scenes, the futures traders. A lot of them are institutions and hedge funds. They were selling first half of the day. The second half of the day, they were buying. You see this? Is that clear? That was Friday. And that's when we got that reversal candle right there at around 1 o'clock. Now today was interesting. First part of the day, the shorts got squeezed big time. That's why you see this large green candle. What happened in the second part of the day? Selling, like K-Bot said.
Buyers.
Huh? Buyers? Does red mean buying to you?
Oh, no. Okay, selling. Wrong day.
Yeah, that's okay. Who's this, Sheila?
No, it's Mary.
Oh, Mary. Oh,
NW.
okay. Yeah, sorry about that. Okay. No, it was selling. That doesn't mean much. It simply means this is, things that I watch, sharing with you guys. And believe me, this stuff is good. When you see candles like this is pure capitulation. This is when the room is dead silent. Nobody, very few of you guys buy my stuff. And I'm buying with both hands down. Look. Pure capitulation. Fear. Tactical levels, I'm showing all kinds of stuff. They don't want to look at it. The only comments that I posted in the room, and there's no problem with that. Everyone's right. It's a free country. It's like, oh, looks like the downside's going to go. Looks like we're going to go lower. People who will just watch prices never make it in this market. Like Mary mentioned one thing, which I loved. What'd you say? Pattern, not price. Right? That's what you texted me earlier. Was that the term?
Yeah, I was.
Yes,
Yes, quoting you.
I'm going to copyright it from you. I love it. Pattern, not price. It's going to make you a heck of a lot more money than just watching prices. This huge capitulation move here, did that do anything for anybody who was shorting down here? And luckily none of our members did. No. Yeah, you could scalp a little bit. Big deal. Because by that time, you can clearly see what's happening underneath the surface. It's deep oversold. You get down here. You buy with both hands down. Yes, it went up. It went up, then it fell again. But guess what was going on the stows? They were trending higher. They were in fact crossing over. They were crossing at the time that this red candle was getting formed right there. Look at that. And I was showing that. Once you start to see that crossover start happening, you better be in that trade. That is your swing trade. That's the boat that carries you up towards the 300% type of moves. And you guys can track this directly on your screen. I don't tweak any of the stows and the numbers. I just look at the default ones. This is a full stow. You can use a slow stochastic indicator, or you can use a full stochastic indicator. Again, people who are signed up with my ACS sessions, I'll be more than happy to set their systems up so have these things in place. So you're on autopilot with at least, knowing the charts. But once you see this type of volume matched with these deep oversold conditions and a slight curl over, you need to be a buyer, because by the time the curl over happens, it's just rocket speed, move higher. And in what do retail traders mostly do? The first little voice that goes in their head says, it's moved up. I can't buy it. I don't want to chase it. Yeah, chase it. We're sitting all the way up here and they didn't want to buy down here. Good luck. So the point is, this is capitulation. You buy capitulation based on different metrics, i.e. deep oversold conditions, and this one matches with the previous lows, the double bottom lows that I showed repeatedly. So today, for example, it's not much of a tell, but the second half of the day was all selling. The so-called smart money created a doji. See that red house? That's it. That's a full stow. That was a full stow that I just showed. The slow stows I use all the time, but this one was a full stochastic. So look what happened. Right off this line that I drew, there was selling. This is after hours, 5 o'clock, doesn't really matter. Does this mean that we're going to just straight come down? No, it simply means that there looks like there's some pretty big sellers in the market today in the second half of the day. Let's move on to the actual S&P 500. Let's look at the daily. So the daily, let's look at the hourly first. So I showed this chart quite a few times. Very simple. We were in a trading band. That trading band was 24.46. Now we're talking about the real SPX, right? This was Friday, 10 o'clock. I said buy, 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 buy. All my metrics were shooting off buy signals, not just on this chart alone, on the other multiple charts that I show. It started off on Thursday with this beautiful reversal hammer, off the 150-day moving average, off this major breakout level. It's a breakout level. Why? Because it broke out here. Like I said, markets love testing breakout levels. Here was the breakout. It was a reversal hammer. Guess what it did? It kissed that breakout level again, which was slightly below 24.20. Can't beat this. Can't make this up. So to me, it was just a pure, did I go hog wild on it? No fear, like, okay, it's no risk weekend? No. Right, decent amount. Even a small amount from 3 to 23 makes a crap load of money. A small trader putting in $300 takes out 2,000 plus if he's following these charts and letting it go. It doesn't have to be 2,000 plus. He could have sold right at the open where I sold my first block at $13. $3,000 would be 23,000. If somebody's a really big player and wants to bet $30,000 on SPX calls over the weekend, which I wouldn't highly recommend whatsoever, he would have made $230,000. Somebody putting $3 in, buying one contract. Actually, one contract is $300. What am I talking about? You can't put $3 in. Sorry, guys. Okay, so $300 would be $2,300. Would you not be happy? This is happening. It's a recurring pattern. That's why it's so critical to understand my charts. Because money, when I put it in frame of actual cash, that's when yours perk up. Who cares about a stow? Who cares about a, cup and handle, double bottom? It's got to make money, period. So here was a solid triple bottom, which still remains a very solid floor. Is it possible that we come back and test this again within the next couple of days? Absolutely. Will that be a buy, support strong enough to buy and ride the wave again? Possibly. But remember what I said once. I've said many times. The more you hit against the floor gets weaker. Just the way I said the third time round. When it hits that upper end, it's going to break out. Just laws of physics. So if we break below and zigzag around here and then fall and thump again, it will be one, almost one, two, third time, chances are it's going to break. And what does that break mean? We're going to come back and retest 2400. No magic. That's it. 50 points from here down to 2400. That's roughly about, 50 points, 53 points is a 300 point correction down. A quick 300 point reset. Beautiful. The media is going to be like, oh, there was a failed rally, the techs can't go any higher, everyone's too bullish. All the same old garbage. They read from the same script. It's going to come out the window. No, we are most probably for the month of July. Remember, never short July 4th weekend. Never. Well, it's a rule, never short big holiday weekends. So you didn't want to go short Father's Day weekend either. All right? And the shorts, learn the lesson. They never learn a lesson. Because when people are dogmatic about being bullish or bearish, in most cases, most traders are dogmatically bearish out there, just so you know, it doesn't do anything for anyone. So bottom line is this is the wide 300-point trading range that we will most probably go through for the month of July. So be prepared for it. Now that I'm, constantly showing the charts, even walking you guys through it repeatedly, this is going to be a 300-point range on the Dow Jones Industrial Average for the month of July. It doesn't, and then the market will decide whether it's going to break lower or whether it's going to continue higher. Given where we are on the weekly charts, which we'll look next. Now keep in mind this is a bull flag. I can't deny that. That's a bull flag. And a bull flag generally breaks higher. Now, why does that happen? It happens because the last of the, well, not the last, there's always going to be shorts in the market. It's just general, you need buyers and sellers, right? So generally the hardcore shorts or the late buyers, the hardcore shorts at that point, they capitulate, or the weak ones capitulate, and then you get that surge higher. And that's what you call an exhaustion gap. All right? An exhaustion gap is when you just move higher. Oops, let me change this color. Exhaustion gap, you see that in many stocks at times. You basically, that's also known as a spinning top naked bar, which I noticed earlier on. But then I explained we don't know whether it's a spinning top naked bar given the fact that the market closed up at 144 points higher. That's the short, the machine's just grinding the shorts. There's no fundamentals to it. Did anything change for all the companies that we trade between here and here? Can somebody tell me, did anything change?
Nope.
Nothing changed. Same stuff. Yeah, Walmart, Amazon bought Whole Foods. If this was a downtrending market, Amazon would be down $60. And I would venture to say it would be down $100 because they're spending so much money into getting into areas where they have to spend more money. You think anyone think that the buy of Whole Foods, and I know Whole Foods well, believe me, Trader Joe's and Whole Foods, we eat very healthy, and Whole Foods, is in the Trader Joe's actually better than Whole Food price-wise. So bottom line is that it's not going to be accretive to their bottom line right away. If somebody knows what that means, it simply means, is it going to add to their earnings right away? No. They're going to spend more first in order to do that. Then somebody's saying Amazon's trying to get into the prescription drug business, which they will. So they're spending a lot of money. So in a sort of weak, sort of pessimistic market, Amazon would be down, not up. But Amazon had an interesting chart, and I've showed it to you guys. So again, so that's it. So this is where we are. So we do have a shot to get up towards this level again. So keep that in mind. And there's nothing to be really surprised about. Now let's take a look at the weekly and see where we can go. I'm actually going to draw. What do I have here? That's the IWM. So while I have it, let me just walk you guys through. It's a pretty simple chart. It's very technical. There's your downtrend line, and it's breaking out. It does have this doji formation right there. Second half of the day was selling again. However, if it's very simple. Sorry about that. So that it most probably covers this gap to 143. If it breaks over 143, which a nice infrastructure plan, a solid one announced could make it happen, then we're obviously looking at this upper end of the zone. This was definitely negative, but then that was negated, and now we're breaking this downtrend line. Let's see. So the IWM and the RUT, they did not give us. They gave us about 60 to 70% on those calls. But the S&P gave us 584. Now, the IWM is obviously for June 23rd, so it has more time value left in there. The ones that gave us the 584% were the 2430s, which were 300% plus, and not 300%, what am I saying? 600%, because we bought it between 3 and 4, expired today. So you need to get out of it today, right? That was the June 9th, the June 19th ones, today's ones. So there was very little time value. It had all intrinsic value. Every point move on the S&P 500 meant a point higher on your calls, which means another 5% up, right? Just the way it goes. I mean, not 5%, more like another 8% up. Every point was like 8% on the S&P 500. On the S&P 500 was up 20, 21, and those were up 600. So it was more than that on a ratio basis. Anyway, so this is IWM right now. Now, let me put the SPY up here, SPX, and take this out. Here the drawing set. This was right before the elections, right there. And this is definitely a very bullish chart. Let's draw the lines. I've shown the charts before, but I'm doing it again. So 2 lines you need to draw. There, okay? The broad line would be just making a channel. There you go. About 2570. That's about 120 points from here. Quick, how much is that on the Dow? 120 points in the S&P 500 from here to the upper end of the channel is roughly how much on the Dow Jones, please? Come on, guys. It's not heavy math. Someone, please. What's 120 points on the S&P 500? I've gone through this so many times. Is how many points on the Dow? Oh boy. Guys, if somebody doesn't know, just ask me so I can for once and for all say it. Write it down somewhere. If you don't know the simple ratio between the S&P 500 and the Dow, then it's kind of foolish to say the least. And people who've been here, does anyone know or no?
No, I don't.
Okay. Mary, thanks for telling. No, thanks for mentioning that. It's frustrating. You can understand.
I know. You said it earlier, but I didn't write it down.
I'm not going to hold you to it. But there are people who I've said it to.
Oh no, I know.
Like 30 times I've said it. So many times. Every time I do my sessions, every time I do a video cast, and yet no one remembers. It's just mind-boggling to me, and that's why I get tired. I mean, seriously, you hear the exhaustion in my voice? Okay, it's 5 to 6 points. Real simple. And I just said it before also. It's every S&P point is roughly 6 points on the Dow. That's it. So 100, this is critical. So this way you know what's going on in the broader picture. So 120 points is 720 points on the Dow Jones Industrial Average. Okay? 120
Yes.
SPX points is times 6 or 7, let's call it 6, is 720 points on the Dow. Right here. I believe we are going to eclipse 22,000 this year on the Dow. And we're going to go to the upper end of the channel. And if things go right, it's going to go higher than that. But before that happens, we're going to hit this 2,500 mark real fast. Once you hit this 2,500 mark, keep in mind, this is channel 1, this is channel 2. These are, oh, this is a 4-hour. What am I doing? Hold on one second. I should be doing, I mean, this is a good one too on the shorter term. All right. So, yeah, okay. So this is a 4-hour chart. I thought it was a weekly. My fault. I told you I was tired. So, so bottom line is this is channel 2. This is channel 1. Once you hit the mid channel, obviously you're going to see some turbulence, and that turbulence is basically, you know, pullbacks. But once you go into the upper channel, it's a very fast ride, like we saw here back in February. Okay, back in February, it's a very fast ride over a couple of weeks, going into the following month to the upper channel. So at this point, from a bullish standpoint, we're not even, at least from a channel standpoint, we're not even overbought, because we're still kind of, we're still stuck on channel number 1. So for people who are bullish, and I'm certainly on the bullish camp overall, because I don't see any reason not to be bullish at this point. And there's synchronized global growth, interest rates are low, you know, the Trump tax infrastructure plan is going to be announced. But unless something really changes, I'm going to stick to that bias, and that helps me with my trading. So bottom line is, once you enter channel 2, there you go. Now, this is a very defined channel. You can see that. So we're not even, like, if you look at this chart, you can clearly see that we got a lot of room to move. We got nice room to move for another 200 plus points just to hit the mid channel. So keep that in mind. So again, one S&P point is roughly 5 to 7, to call it 6 Dow points. One, when I show the futures charts, 24, just getting an arbitrary number, 2,400 on the E-minis, on the ES, is how much on the S&P? Anyone remember? 1 ES, please write this down somewhere, because it's going to help you a lot, trust me. Okay, this is the essence of understanding my charts, which makes a lot of money for a lot of people. Okay, 1 ES, you have to add 5, roughly 5, to arrive at the actual S&P number. Okay, this is second grade math. So 2,400. When I'm showing the charts, the 2,400 E-min, you know, is the level on the E-minis. How much is that on the SPX? Can somebody tell me, if when it's 2,400 on the E-minis, how much is it? How much is that level on the SPX? No one knows? Wow, you guys know how to add? I must be doing something really wrong. I must be doing something really wrong, because I cannot believe that, aside from KBOT, nobody told me this, that it means 2405 or so on the S&P 500. Please tell me what I'm doing wrong, because this is almost like unbelievable. We're at 24. I'm not laughing. I'm about to cry right now, honestly. Let me see. One second. I love you guys, but seriously. Should we go back to remedial math, second grade? All right. 2449 is the mark right now as we're speaking real time on the E-mini S&P 500 index futures? How much is that on the SPX? Please, somebody step up and tell me. What is wrong with you guys? Seriously, I'm doing something wrong. I'm going to take the full blame. I mean, what is going on, guys? One E-mini is 5 S&P SPX. So what is 2449? Holy crap. Guys, somebody tell me that you just understand. It's too difficult a question. Please, somebody step up. I swear to God, I will not speak anymore. Okay. This is beyond crazy, guys. I'm serious. I mean, it's beyond crazy. I just told you one. I'm just going to do this over and over again. Oh boy, I need a drink. One ES is when you have to add 5 to it to arrive at the actual S&P 500 number. So if it's 2449 right now, as we are seeing in after hours, what is that in SPX? What is that in actual S&P 500?
2454. No?
Yes, that's right. You're right.
Oh, okay.
Let me ask you a question. What was the holdup? I'm not blaming you. I'm doing something wrong. You know, I mean, I really want to, like, I want to know what I'm doing wrong here. You guys don't know how to add 49 to and 5? I mean, am I like, are we living in like a...
It sounds like what you're saying is...
Go ahead.
It sounds like you're saying 1 point on the...
No, I know what...
1 point on the E-mini...
Is 5 times on the S&P? No. That's for the Dow.
Right.
I keep on. I even put a plus sign here. So where you see this is what I'm getting at. This is I'm not about you, Mary, but I'm just saying in general. If the simple things that I'm putting through, like in a trade alert, I'm writing in simple English, the pullback target is such, and then somebody comes to me and asks me the same question over and over again. Hey, what's the pullback target? It's mind-boggling to me. So as a coach, I will not entertain that type of stupidity because that's just pure like crazy. So just to repeat, and someone write this down because this is very critical to technical trading. One E-mini is when you want to convert it into the SPX, you just add 5 to it. So 2449, as you correctly pointed out, is 2454. So one E-mini is 5 points less than the SPX. That's the conversion. Is that clear with everyone?
Yes.
Aside from you, Mary, is that clear with other people who are listening? Or maybe people are not here. Okay, that's why. Okay, that's good. So bottom line is at this point, so that's clear. And remember, on the S&P, each S&P points, Mary, is if you want to translate to the Dow Jones, that's 5 times. All right. So when the S&P is at 100, Dow's at 500. Got it? So that's pretty simple. So S&P here is, there we go. That's the weekly chart. That's the one I was looking for. Sorry about that. So if somebody wants to do a long-term projection, we are basically going to, if things work out, we will most probably end close to 2,600 on the weekly chart by the end of the year. Pretty staggering number. Now, if we are at 2453 and we go to 2600, that's 150 S&P points times 6. That means another 900 points on the Dow. You know how that's going to happen? That's going to happen on the heels of the oil stocks, which are trading at all-time lows, breaking out or testing their highs, right? And the banks taking off and testing their highs. That would give, and for the rest of it, that would give roughly 900 points to the Dow by the end of the year. So now you know. Now in the meantime, we are quite overstretched, and this is something I want to show you all, and then end this session. Is in the meantime, we are quite overstretched. The simplest way of looking at it visually, without getting into actual quantitative numbers, is the distance from the 34 and the 50 is called the standard deviation. When we get too far away from the moving averages, specifically the 34 and the 50, you always get a pullback. The same way when you fall too far away from the 50 and the 34 and the 50-day moving average, you revert back to the mean. It's known as mean reversion. In other words, you come back to the glide path or the road. This is the road that the market's traveling in, right? So when you move too far away from the actual highway, you tend to basically come back and retest that. That's why I said that the 2320 level is a key critical, and that's a long way off. That's a long way off. That's 700 points from here to here, right? So that's going to take, it could be fast and furious, but that's still, once this breaks, we're in trouble. At that point, we are looking at testing lower levels, and that's a short-term bear market. But we are, as you can clearly see from the chart, we are very far from that. But the distance right now between the 34 and the 50, just the way it was here from the elections, this was the elections, and look, we kept on climbing, and then we almost retested the 20 moving average. So the 20 moving average here is 2381. So pure technical analysis, we have room to fall with the uptrend completely intact. In the meantime, we got all these charts to play with, and we are, we're good. So anyway, so just want to give you a quick idea on that thing, and we walked through a bunch of charts and stuff. It's in simple terms, the market is overbought. Be careful with the trades. We, don't expect like a one-way runaway train, but there are certain sectors like the biotechs and the banks which are which are just starting to move higher. I'll be showcasing them again tomorrow. So focus on that side. The techs could be a little bit too overstretched here, if you really ask me. We still have room to move, but they are overstretched. So we have to be careful about those. And that's all. Any quick questions before I wrap up? It's almost, it's 9 o'clock. And sorry about that. And thanks for clarifying it, because on that E-mini SPX thing, but if it came across the wrong way, but it's simply a matter of SPX is not 5 times higher. It's a +5 when you want to get to that number from the E-minis. Any quick questions? Nope. Okay. So I'm going to wrap up. I'm going to put this up on YouTube. I'm sure it's going to help a bunch of people. And do take the time to see the real-time videos that were that have been uploaded since last week. Those are critical, and those are fantastic. You see in real time how these things work, and they give you a good idea how to look at your own screens while you're trading my alerts. So on that note, have a great evening. God bless you all. See you in the morning.
Great session.